Hello everyone, this is Andrew Campbell from Avery Commodities SA, and I'm here to talk about vegetable oil markets and the price prospects for sunflower oil. This session will be divided in three. We're going to talk about why did vegetable oil prices go up 2 years ago and last year. The second part of the session will be why are we going down so fast, and the third part will basically be where do we go next. To start with, why did we go up so fast in first place? Well, this is just a recollection of factors, right? So you're probably very well aware of the individual factors, but I'm just trying to put them together for you. Well, we started with a very big crop loss in Ukraine 2 years ago. That crop loss in Ukraine, of course, led to much higher sunflower oil and sunflower seed prices around the world in relative terms. This was followed in the next year by a rapeseed crop failure or canola crop failure in Canada. That crop failure in Canada made prices worldwide for canola oil and rapeseed oil to skyrocket as well. This happened at a moment that the world was recovering from COVID. So there was quite a decent demand recovery and pipeline rebuild happening at that stage. That also happened when the US was ramping up biodiesel or renewable diesel, more clearly, capacity in the back of potential future mandates. And lastly, the reason why we saw so much higher prices, obviously, it was the war between Russia and Ukraine in Ukrainian territory. With this, of course, we not only lost acreage in Ukraine to a crop of 10.5, 10.6 million tons, but we also lost export capacity. The word between end of March, last days of February 2022 until almost August, the world was not seeing any export out of Ukraine. So that, of course, the tighten on supply made prices firm up considerably during that period. Then, after that, what happened? Well, we stabilized in a very high level for vegetable oil prices. With such a stabilization, we did see an acreage increase around the world. We saw favorable weather in Canada, and also we did see used cooking oil supply, catching up very fast. So the economic incentive for UCO has triggered China, Malaysia, and Indonesia, and many other countries around the world to collect and export more used cooking oil. With more used cooking oil, we're basically replacing virgin oils into biofuels, mostly. This happened at the same time when indeed we have a crop loss in Argentina, which you can call it sub 30 million tons easily at this stage, but also at the same time we had a huge crop in Brazil. It's fair to say that the crop in Brazil is not below 150 to 153 million tons. With that, we created a Brazilian beans carryout of at least 10 million tons, let's say, even if you consider that Brazil will be exporting part of those beans already to Argentina. All right. Then at the same time, we saw Ukrainian farmers and the country itself needing cash, the need for cash flow. So everything the farmer had and everything the crushers could buy in Ukraine had to go to the export channel straight away. To that, we must add that the storage capacity in Ukraine has been decreased due to the war. So the main storage pool in Ukraine is the port of Nikolaev with 500,000 ton storage. Nikolaev is not part of the grain deal. It's not part of the storage pool. Because of that, Ukraine lost half of its storage capacity. So on top of having the need for cash, the need for storage is also there. So naturally, the price pressure, the selling pressure from Ukraine is very heavy, and it should continue relatively heavy until Ukraine runs out of seeds. Continuing on, why are we going down? Well, definitely another factor has been the huge crop recovery on our canola and rapeseeds. Between Canada, Europe, and Australia, the world has produced more canola and rapeseeds than actually the world can crush, unless, of course, we're gonna find so much more demand in China. But we don't think the prices of rapeseed oil are there to the stage that it will be replacing even potentially palm. So all these factors are putting a lot of pressure in our market. And this is happening also at the same time that we've seen a huge overall agricultural commodities sell-off. So we cannot discard the fact that wheat, beans, meal, everything has found a top and has been selling off. So the momentum has been extremely negative, which led to the price for sunflower oil below $1,000 today. As we stand today, then we go to the third part of this discussion. Where are we going with prices? What will sunflower oil do? Well, basically, let's start with our demand assumptions. At the time of this pitch, sunflower oil is trading at par with palm, pretty much. We see sunflower oil trading below 1,000, so let's say $980. That's not very far away from palm. If in India we assume a demand growth of 4.5% a year, this means that sunflower oil demand equivalent will be close to 300,000 tons a month. This is close to a record average pace. We could argue that at this stage we're already switching in the east coast of India the super early in demand for sunflower oil. With these sort of numbers, and considering also a demand recovery in China above 10% most likely, which will imply yearly demand from China for sunflower oil of around 1 million tons, it is fair to say that the world cannot sustain such cheap sunflower oil price. So what do we expect? By end of May, beginning of June, Ukraine will be running out of seeds. Not only that, meaning that the world will not be able to put hands on cheap sunflower oil anymore. Russia is not able to export more than 340,000 a month on a consistent basis, and the fact that the also prices are low in Russia and Ukraine would simply cease farmer selling. So we do believe that these sort of discounts for sunflower oil are simply not sustainable, and if anything, they represent a very good buying opportunity. We also have to factor in the possible acreage loss that we're facing today due to the lower prices. So the farmer has not planted sun seeds yet in the northern hemisphere. So we need to really challenge our assumptions on acreage, which could imply then lower production, even lower than this year in Ukraine, and maybe potentially lower than this year's Russian crop as well, which then could bring up another story on the long run. I'm not here to make a call on what the world of veg oil flat price will be doing, because as we stand today with the geopolitical and financial market uncertainties, that became nearly an impossible task. However, I'm here to repeat to you, sunflower oil is very cheap on relative basis, and it should not be sustained. So if you can get hold of relative value sunflower oil, I do recommend you do it. Okay, thank you very much and enjoy beautiful Argentina. Bye bye.